All right, let's jump into it. Where are we at? 10:47 on the 18th of October. So quite a sort of bit of an interesting night overnight. Look, we had a bit of US data out. The story still seems to be that you know what? I think I've heard the term exceptionalism, sort of US exceptionalism data kind of thing, sort of thrown around. And look, I guess that's pretty much what it is at the moment with DXY, well, US dollar basically. That actually let's jump. I was going to start with gold, but get on to DXY because we are seeing this just keep defying everything and grinding high and grinding high. Had this one yesterday here with this. For some reason, why is this not showing up? I don't know. It doesn't seem to be transferring across. Anyway, I was looking at this negative divergence. It was looking okay. Obviously, we had the sort of confirmations a little bit lower to get down here, but unable to do it. So it's jammed through to the top side yet again. And interesting because it's doing it at the same time the gold is also breaking all-time highs, and that's obviously why I was going to start with gold because that's the trade at the moment. But as I said, because I was talking about US dollars, have a quick look at what the data was. It was retail sales. So we had two things last night actually. Let's go through. Like first of all was ECB. ECB cut by 25 base point. Expectation was to cut by 25 basis point. The response is fairly muted. It's not a whack massive 50 basis point cut kind of thing. It was expected. So, you know, the reaction, it's basically already baked into the price action there. So not a great deal of movement off that bit of data that came out. What did move things a little bit more was the retail sales for the US, and that's a little bit more sort of like, you know, ECB is obviously going to have flows, is going to have affected that, particularly euro against the DXY, this kind of thing can certainly shift things around like that. But, you know, US data is really the big one that's going to be affecting us because trade Aussie and trade gold, and they're both very sort of temperamental based on US dollar movements and fluctuations. So look, retail sales were 0.1% previously. They were expected to tick up again when the expectation, the price is half baked into it. And then it came in just a little bit above that. And remember, it's sort of like, so if you sort of play these out and you say, okay, retail sales, why is it going to be strong? Well, you know what I mean. The thing is, if the economy's struggling, the central bank will step in and give it a helping hand. They do that by cutting the rates. Then you think, okay, that's how they'll work. That's fine, that makes sense. If people are out there spending, well, they're obviously not completely on the bones, like sort of like, you know, out of money. Uh, it's not only that it's moved up, but it's actually beaten the expectations. um, the way that the Fed will see this kind of thing is like, well, people aren't struggling as hard as they like. Again, whether this is actually, you know, boots on the ground, what's actually happening, that doesn't matter. It's like what the market and how the Fed will perceive these things. And if it looks like people are still out there and spending money at the rates at the current position that they're at, well, it's less inclined for them to go, we need to give more of a helping hand. Say if this came in at, say, you know, 0 0.1, stayed stagnant, went down, anything like that, 0%. You know, then the market would be sort of going, well, the Fed would be going, well, okay, people aren't spending. Geez, we don't want to sort of have people not spending, which will then hurt small businesses and other big businesses because they're not out there buying stuff. That's what's going to lead to a recession because not only have the people not got money, that they're not spending money, so the businesses won't have any income. So then they'll have to unemploy people. They'll have to sort of lay people off. You know, you see how it works. It all sort of flows on kind of thing, and it's sort of like, you know, well, this isn't the case. They've got the money. They're out there. They're spending. They're spending more than they sort of had sort of predicted for. So it means that they don't need to give so much of a helping hand. So it's a bit more of a, well, we don't need to cut so hard. We can keep the rates at the level they're at, and that is hawkish for the moment. And this is why DXY took off and moved up to the top side over here. So, you know what I mean? It's no surprise with the price action. It's a surprise that it just keeps on going. Look, it is and it isn't. I've said the whole way through, this whole sort of move up through here, I've been saying, be careful of DXY. This is how it trades. Once it gets going, it's very hard to turn around. Not only that, but it'll look like it's falling over. It'll give technical setups like it's okay, here we go, we're dropping, and then it'll jam up a couple more levels. So look, where we are at the moment, look, this is obviously, this is above a couple of different areas in which I sort of thought it was going to come to. Price target 2, smacked into it, kept on going, smacked down, kept on going. We're up to quite a pivotal point now. We're up to a 61% retracement of this large drop down. Remember, this drop down was coming with the anticipation of the cuts, and then the cuts were this tiny little bit over here, and now market's just gone whoop, straight up. Like if you take all these drawings off for 1 second, if I would take this, look at the gradient that this has come back up on. I mean, if that's not a short squeeze, come on. You know what I mean? And it just so happens that they have, US exceptionalism data that supports this stuff and yada yada. Like, it's all a little bit iffy as to sort of timing and the levels of their data coming out. But you can see how this is coming down, coming, and then bang. Look, it took from, June to, let's call it at the bottom, June to September, and then it's gone back up 61% of that. Let's put the drawings back on. It's gone back up 61% of this drop down here within, September to October. So you know what I mean. The amount of time through here is obviously a lot faster rate of it pushing back up than it took to get down there. So these are sort of the things. There's a guy sort of that I watch on thing, and he says, what are the hallmarks of a short squeeze? And it's a short and sharp, unrelenting, and it doesn't last. And that's the thing. I'm not sort of saying that this is necessarily this is just a short squeeze before we come down over here. I mean, you got to play that by ear, and you got to do that as it comes. But the fact that it's come up and just kept going up like this, people are trying to short it, they're getting hit. They're trying to short it, they're getting hit. They're trying to short it, they're getting hit. It is absolutely wiping the floor with anybody that had technical stops through any of these levels. And this is why you bank. This is the thing that people sort of say, why don't you just put stops and let things run? Well, this is why. Because you could have been in this great position all the way down here, and you've moved yourself, and bang, you get blown out. You know what I mean? So, yeah, look, to me, I sort of think that, again, I've been saying the last couple of days that, hold on, I think we're going to fall over around here. I do still think this is coming to a halt. We're at the 61% retracement. We had a big push up last night. Gold, if that's an indicator, said, screw you, I don't care. Gold just sort of broke the old new all-time highs. Even as we're looking at it now, it's at 26.94. So, we're on the cusp of 27. As I've been saying a couple of times, 27.30 to 27.40 is my measured move price target. So I still think we've got a little bit of upside here to come. And I think that is something that will give us this move here. These moves back here are getting sort of, you know what I mean? There's higher and higher levels in which still a sustainable bounce can happen. Because we still need to update this. This is our sort of like lows to the high now. These pullbacks, as I said, have been super shallow, and this is a good way that you can sort of look at how the fib retracement works. Because at one point this was the high, and if you look, it didn't even get to the 23, and it went through. That's bullish. Here was at one point, this was the high, didn't get to the 23, went through. That's bullish. You want to start to see deeper sort of pullbacks before you can sort of say that, okay, the move's over. But as I said, you can still hit the 38% retracement, which now is only 102.47, 102.50, call that just to make it easy. That's still a 38%. This is still a bullish pullback to then potentially even go higher. So, you know what I mean? It's the higher it gets, the more you sort of think, okay, this move is going to continue for a little bit longer. But, that's bigger picture stuff. I still think that these moves over here, despite this, whatever, for some reason this doesn't want to show up. I don't know, bang. This is still what I'm looking at. The fact that we're making highs each time and time again, and it doesn't really seem to be sort of jamming up here. This looks like it could be rolling over here. And so we are technically getting, albeit small, lower highs with the RSI. This is on the 4 hour, so it's a justifiable thing. And we're getting higher highs through here. That is a negative divergence. It looked like it was about to roll yesterday. And then the data came out, bang, and it went through to the top side. Okay, that's fine. I mean, as I said, the data will move these things. The data doesn't really care about your technicals or your levels really so much sometimes. Like it will sort of to a certain regard, but if you've got particularly, if you're on lower time frames than that, and you've got a bit of data, it's not going to go, oh, hold on, wait, here's a support level. It's going to go, well, geez, the landscape's changed a bit. Let's bang and jam it right through. And so, as we can see here, it's a shot up here. I still like the idea of this being not a super, but a bit of a wedge. I like the idea of this being a negative divergence. I like the idea of it coming into the 61%, and I like the idea of this being a little overthrow based off that news. So again, look, you move your levels up, and so now the first thing we want to see is underneath 103.41. Geez, I mean, these levels, remember, it was only just back, end of the start of this month. That gives you an idea about how quickly this has come back up, and it's undone that move that took a couple of months from, here's the start of the month, just here, and it's come all the way up here, which is, as I keep saying, 61% retracement. And it's done that in 18 days, not even 3 weeks, and it's just gone like this. So it just sort of makes me think that, look, eventually, look, we are going to see this little pullback down over here. It's just the higher it goes, you got to get these levels. Realistically, as I keep saying, come back to 23, which we can see this is a little bit of a support area through here. That's still the 23%. 103 round number, 23% pullback. Look, this will sort of shake things a little bit. Gold's already being bought up. You know what I mean? If this pulls back, I think that'll still give gold the little kick it needs to go higher. But, I'm still sort of cautious moving into the end of the year whether we're going to get this big sort of rollover down over here because, we could still see a back test of the top side of this. We never got the back test there. We got a little bit of this back test through here, but generally you get a smaller back test and then a bigger one of these kind of ranges, particularly when it lasted for a little while. So for me, it sort of makes me sort of think, despite sort of, some strong retail spending, that we should, from a technical standpoint, see a little bit of cooling off. But what I mean, a lot of people have said this, and this is why I said it. You don't jump on this thing too early because once it gets going, it gets going. And it looks like it's going to fall over and it jams through and it goes higher and higher and higher. So there are people that said it here, people that said it here, people that said it here, no doubt, all the way through. So people trying to sort of call the turnaround, that's fine. I'm not trying to call the full turnaround. What I'm trying to do is sort of say, okay, where's the cooling off period where we can get short the dollar, find what works for that. Aussie back up into mid 67s, gold pushing through to those measure move price targets at 27.30, 27.40, these kind of things. That's what I'm looking for. And then if we see US dollar come here and then maybe find some support, then we flip onto the other side of that trade as well. But I do think, a couple of days early, this move is coming. And this is what I'm looking for at the moment. All right. So that's a bigger picture. Let's zoom down and say, where do we want to see underneath? Look, I mean, as I said, slightly lower highs coming through here. But you want to see take out retail sales lower wick. So that 4 hour from down here. So underneath 103.40. Look, there's so many levels along here. You can find support in a whole bunch of these areas over here. So realistically, that's good. Look, if we sort of respected this little rising support quite well. So let's highlight it a bit more. So here, 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 here. So first thing, get down under here because this is going to be a bit of a confluence here because you got a horizontal support here. You got this little area here. Plus you've got this rising support, so maybe a small rejection here. I think that the plan of attack for the downside would be to break this level, see a back test here, and then move down. That's the sort of thing that makes me think that this larger move coming through here, I'll make this a different color. Red's a bit sort of cliche, isn't it? Make it orange, whatever. That's the kind of moves that I'd be kind of looking for. Break of the horizontal, break of the rising support, back test of the underside of those, and then take out that lower low down underneath that. So do this kind of thing here. underneath that. Take that arrow off. That for me is the confirmation that we're going to see this deeper sort of pullback. As to sort of, whether it comes here or comes down here or whatever, that's what I'm looking for. A break, retest, and then a lower low through that area there. That'd say that to me that we've got break of the rising support, break of the horizontal with a lower low. Okay, that's good. And you can move on from there. So, I mean, it's a little way off there. Again, we're right up the top over here. It is quite bullish. It is just sort of consolidating this top little level here. If we get onto a smaller time frame, you can see that it's kind of, I mean, it's not really given back much at the moment here. So where we are, 11 o'clock. So, give it another hour so we can see sort of what happens. I think if gold starts to move, that'll be something that'll be an indicator that we'll see a little bit of a sell-off here. All right, speaking of gold, let's get onto it, get into it. We saw new all-time high. So metals yesterday, actually the last couple of days. I mean, yes, it's moving up. It's certainly grinding. So I think a lot of people are getting quite cautious up around these levels. Certainly I am a little bit as well. I do say that, look, these are the price targets. That's fine. And I do think that we could potentially hit that. But we've been seeing either, like, I'm not sure of these things. I mean, you build little stories in your head almost as to the price action. Look, gold loves to do these kind of things. It'll move down, break the lows, and then it'll move up kind of thing. And yesterday we saw quite a few little shakedowns because remember 85, so this level over here, this white line moving through here, that was your previous all-time high, 85, 86, whatever. You can see it clipped it, bang, down. Came up, clipped it, bang, down. Clipped it, poked its head through for 2 seconds, and then we had the data. So this is when the data dropped actually. So we can see this on a sort of lower time frame. Data dropped, it got hit because, as I said, US dollar strength with that, and gold, they sort of was less immediate base case. I don't know, if you want to call it base case, whatever. There's a less immediate sort of case for gold to be moving because gold's sort of like, okay, US dollar, 90% of the time they're inverse to each other. Strong retail, well, Fed's not going to have to hike rates, yada yada, and that's why you saw the quick sell off down here. But there was a data point drop at 83, I think it was. So it was around this level over here. And there's a big thing with data drops and that. So when the data drops and the market reacts and it happens like this, if it undoes that move within, say, an hour or so, generally you see quite a strong move. So we saw gold sort of sell down. This technically is a little all-time high, as you can see, only just above here, and it sold down here. The data dropped here and dumped right down, back down to 72 from 88, so 16 bucks off the very high there, dropped sort of $8 or so off that data drop. That then sort of came back up, and you can see this perfectly shows it. That sort of data drops, sells down, comes back up. This is on a 30-minute, so within the hour, it's already taken it out. It took out the data drop level, and obviously you can see the reaction afterwards. And this is why it's, if you're going to trade these data points, this is a good way to do it because if you see things happen, okay, you don't jump into it, you wait to trade the aftermath. If it comes back and undoes the data drop point, and this works with a lot of things, it works with CPIs, NFPs, what I mean, employment data. Like it's a good sort of thing with price action because it's not really sort of specific to a bit of data. It's more just to do with flow and price action, and that's what I mean. And you can see the reaction afterwards. Here, took it out, and bang, springboarded right up to the highs over here. Came up to where we get to 97, so just underneath, 2700. A little bit of a sell down, buy up, sell down, whatever, and now it's kind of just drifting through. So above this little level here, it's not enough to sort of say that this is like a big sort of resistance or anything. This is just, it was the overnight highs. It's around the big sort of round number, this kind of thing. I would say that, look, potentially you're looking at whether you want to sort of do it like this or you want to do it like this. The first one seems a little bit more, meh. We've got 3 touches with this one here, so I'd say that's good. Look, end of the day, you want to say above 83. if you go below 83, yeah, okay, you could say, look, we're probably going to come back down to the mid 70s, and we kind of just we work out for a little bit of a range to go through here. As it is at the moment, look, RSI is sort of still moving up. It's got room to move. This is on the 30 minute. Let's put it on a 1 hour. 1 hour, it's sitting perfectly to basically back here, down, flow, and then move up to the top side. And you could, I guess you could kind of sort of say, look, with these things, you can either sort of say that that's going to be your measured move. I mean, obviously we got the larger measure move off like this, but I'm just talking about in the immediate. There's two price targets you could do. Is this one here, and then this one here. Both of which kind of come to the same point now that I look at it. So realistically, a move above 27, 27.10 will be your first little price target, I would say, based on these. It looks a bit scrappy, these sort of things here, so let's get rid of this one. Yeah, that would be your sort of like, your potential pole, and that's your little measured move through here, which brings this down anyway. Something along those lines. There's a bit of a scrape. These aren't the gospel. This is just what I'm expecting. The thing that I'm sort of taking away with gold at the moment is, as you can see, it made a little all-time high here. It made another little high over here. It's not exploding. You know what I mean? Like, you would sort of think maybe there'd be some stops up around this area, particularly the fact that these were the previous highs, um, sort of, up until September, a month ago. And we haven't sort of seen it sort of really like trigger stops and go bang. Maybe a good thing, because of course we know sort of going back last year when it did hit those stops and it ran $50 in 15 minutes. Well, the result after that was $150 pullback. And that's $150 in a percentage terms of where it was at like 2000 or something then. Or I think 2140 it hit. It dropped $150. You know what I mean? The same percentage now will take you back 300 almost. Or maybe not 300, but like it'll take you back a lot, basically. So, some alarms going off. So that's a sort of bigger picture with it all. I think, yeah, look, if you take out sort of, say 27, because that's a round number, but certainly even if you just sort of put a little push in above these highs, I think that's like people are just going to think. End of the day, if you look at it on a higher time frame, that is a breakout. You know what I mean? And this is what we would say. This is the flag, you break, you back test, top side of this flag, higher high, moves forward, closed on resistance, powered through, push through here. So if we jump on to lower high here, let's say, where's your, that's your level there. Most likely, I would say, is as you sort of shoot through here, we've got room to move with the RSI. We're in a very bullish momentum. We've got the breakout. That was a big candle to the top side here. I would say that this has got, and probably a couple of days move in it. I don't think it's, I mean, look, anything can happen, you know what I mean? But the thing is, based off what I would assume, you're probably sort of, 27.10, 27.15 is probably a decent move in the short term, and then maybe a little bit chugging along till we hit this price target up around 27.30. But certainly if you take out 97, 26.97, that's a new high, and you would assume you would just basically off this price action. You've got RSI supporting it. You've got your break, your back test. You've got your flag over the swing swing high. Well, swing high was technically back over here, but over previous highs, that would see the sort of move up sort of here, and quite a large sort of bodied candle again, I would assume. So yeah, definitely some upside coming in metals, I would say here. Flip on to silver. Silver is underperforming of the two. It is sort of coming back here, but it's obviously struggling and waning a little bit as it sort of moves back up. It did touch into this sort of resistance area, but obviously as it came back, it's just thought about it. And so it's moving up a little bit now. It's, as I said, look, basically 32 as a round number. That's where you want to see it above. If we get a close at 32.40 for a daily, which is a fair move from where we are right now, but 32.40, you get a close out of a daily there. Look, that's going to be this big breakout for it, and I think that potentially you've got 34 coming after that. Of course, you want to get above the wick highs, which are now sort of multi-year highs, but it's all lining up for potential break to the top side here. And if we do see gold continue to move up, it's just general metals energy flow across the market, which is going to keep it elevated and keep it moving sort of to the top side. You're going to see some runoff with that kind of stuff as well. So just checking a few other things. Yep. Okay. So yeah, look, that's again bigger picture there. Get onto the small thing. You can see that it had a little bit of a tough time here, as this is like what happened when gold hit all-time high. Gold, as I showed a second ago, came back a little bit. Look at them side by side of the reaction of gold and silver. So this is silver on the left here and gold on the right. Again, the little dotted lines will sort of show you so you can match up the times. But look at the sell down here. You know, these two candles here on the left are these two candles here. Gold gave back very minimal parts and they were buying up, buying up, buying up. Silver got hammered. Silver went to just over 32 and then dropped down 70 cents. So that was a very big sell down. And this is what I've been saying. Sort of like every time they've been selling it down, there've been some solid sell downs. They're buying it back up, buying it back up, buying it back up. There's an analogy with the beach ball that, like, you know, you push it down, it pops back up, push it down, pops back up, push it down, pops back up. The deeper you push it down, the stronger the pressure that builds. That when it comes, it goes bang up to the top side. And going back to one chart, this is what I've been calling with silver for the last couple of weeks, is this potential idea here. Push it down, comes back up. Push it, so actually the first one would be here, push it down, comes up, push it down deeper, comes back up, push it down deeper, comes back up. So this is why I say if we get a close up around the mid 30s, I think that's going to see a springboard, which is going to give you a move up to 34. Remember, it hasn't been able to, it's shot up here a couple of times, but it hasn't been able to close up here. And that's the important thing you want to see. You want to see the day, the candles do what the previous candles have not been able to do. And these ones have all been sold down from this level. So if you get one that does what these candles haven't done, i.e. a big sort of close up over here, so you see, like, you know, if this comes up like this, no, can't see it on this time frame, okay? This one here, there we go, make this visible all time frames for information purposes. If you see a candle do this, well, it's doing what these ones couldn't do. There's a higher chance that you then see this, a move through. So you just want to be able to see a candle do what the other ones haven't been able to do. Get rid of those ones. Whoops. All right, bang. So that's a bigger picture there. In the short term, let's get this off again. Look, we can see that in the short term, this is the level that they're holding at. Same sort of deal. And this is what I say, like a lot of this price action and flow is the same no matter what time frame you're on. You're not looking for a different setup or different indicators and that in terms of price action and flow just because it's on a different time frame. It's exactly the same. Same sort of thing here. It's gone above here, as you can see, went to 32.17, came up here, hit this level again. Body fill of this candle over here, came up here again, unable to close above this zone. So in the short term, what you want to see, and this is what I was saying, this is exactly the same thing as I was just showing a second ago. If you look at this little price thing, moves up, comes down, moves up, comes down even further, moves up, comes down even further, comes up. This is what we're looking for a move to the top side here. So right now in the short term, you want to see an hourly close above 32. That's a pretty easy sort of thing for it all. If you see the hourly close above 32, there's a good chance that we're going to see a continuation to the top side. You know, that's the top side idea. Bottom side idea is the same sort of thing down the bottom here. If you see a candle do what these ones haven't been able to do, let's put it just over here. Let's say that's your level here. If you're looking downside, get this out of the way, you want to see the candles do what they haven't been able to do. Every time they put it here, they bought it back up. Put it down here, they bought it back up. You know what I mean? If you want to see a sort of downside move here, I'm not looking downside with metals, by the way, but this is the same sort of thing, considering both sides of it all. This is why you use a breakout box, what I call it anyway, little consolidation area. You want to see the candles do what they haven't done previously. By the way, in which every time it's come down here, it's unable to close on the outside here. So if you get a close above 32 or you get a close below 31.70, I think that's going to give you your direction as to sort of whether you're going to be doing this or this. As I said, I'm leaning more to the top side moves based on the fact that gold's still sort of chugging on. But again, you need to sort of just consider both sides of it. All right, move on. We got Aussie fighting back from under 37. 37, I always say it must be some sort of form of dyslexia. But look, again, this is a good sort of indicator of sort of support and resistance. We can see that, obviously area support, 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 support. And this is a good indicator. See how even this one was bought up. What was this candle able to do, which none of these candles could do? It was able to close down here, technically under 67. Has a back test, and bang, there's the move down here to the bottom side. This area now becomes very pivotal, because we can see that sort of like, where it was sort of like support, 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 well, what happens? Comes up here, resistance, bang, back down here. Comes down here, resistance, bang. So again, you want to see, can these candles here do what these ones weren't? Do we see a big sort of blue candle that comes up here and closes at 67.12? If it does, then we can look at the other levels where we've got the other sort of sellers, and we can see a little bit of a topside move here. But this is the move that I sort of thought that we would be seeing up into the mid 67s, and then a potential sort of sell down further after that. We do have a little bit of a sort of wedge setup coming through here. So there's a couple of reasons why we sort of saw this. We also had employment data yesterday. I didn't even touch on this, but they just like they seem to spam it 20,000 give or take every month. They get it drastically wrong every month. And this is what I was saying in the video yesterday, that if we had unemployment go down or stay flat or go down, which we did. Last month was actually revised down, and also it came in lower than expected. Expected was 4.2, came in at 4.1. That with strong growth, again, you got to play it out. What are the central bank going to do? Well, these people are still hiring, so it can't be as bad as they say. Look, whether this is the actual truth or not, it doesn't matter. That's not what we're trading. What we're trading is what the market's reaction is to these things. And the thing is, they're saying, okay, well, you know what? You're not hiring people when you're worried about paying your bills. You're hiring when things are okay because you're looking to expand. So if that's the case, you don't need a helping hand. Well, not as much of a helping hand as people seem to think. I mean, inflation is still at 3.4%. Target is 2%. Acceptable band is 2 to 3%. You haven't even had one print in that level. Like, everyone's like, oh, maybe they could do one for Christmas. Like, they miss the point. It's, they're not there to sort of coddle people who have no idea. And that's what it comes down to, because the people that are really hurting now, the people that are sort of like, oh my God, we need some relief, are the people that over borrowed. The people that sort of like are going, oh my God, I can't afford to do this, and pay back my loan because I borrowed 1.3 million while I make, 100,000 a year or 80,000 a year or whatever they make. They're the people that sort of like, have helped exacerbate the housing issue, the housing problem. You know what I mean? Like prices went ludicrous because people borrowed beyond what they could realistically afford, and that's why they're hurting now. And they're sort of thinking, well, if let's lower the rates. Think about it, play it out. You lower the rates, what do people do? They borrow more because most people are morons. They'll borrow more. Housing sort of then accelerates again. That's not going to make your bread and your milk and your eggs cheaper. Like, that's the whole thing. People are crying about the cost of living and the expenses. and they think, oh, we lower the rates and that's going to make my groceries cheaper. How? Like, if you actually sort of think about how does that relate? Yeah, you could sort of say that, okay, these large companies could put down prices, but remember, inflation isn't deflation. Deflation is the prices coming down. Inflation is always moving up. It's just moving up at a slower rate. So your bread and your milk is not going to get cheaper because you can borrow more to finance your loan. You know what I mean? So the two are kind of sort of separate issues in that. And, people sort of go, well, oh, we want to do that. So if you lower the rates now, you've still got inflation as a problem. You've then got housing as a worse problem. And the only people that really seem to benefit are the people that didn't understand what they were doing in the first place and borrowed beyond their means. Well, I'm sorry, but this is sort of like, the natural balance of things. You know what I mean? Like you stuff up, well, you pay the consequences. I'm sorry, but that is just how it works. And this is why, if you look at the comments that they were making, that Bullock was making, she was like, look, unfortunate thing, some people may have to sell their houses. And yes, they may have to sell their houses because that's the penalty for being stupid. And I'm sorry, that's a bit of a sort of full-on thing, but end of the day, that is what it comes down to. No one forced you to borrow beyond your means, but you did, and now, you know what I mean? Look, the RBA did sort of say initially, back in whenever it was, 22, 21, sorry, 20, 21, around there, look, we're not going to raise rates. And yes, they screwed people over. Low said, we're not going to raise rates till 2024, and then hiked them sort of 15 times or something like this. But end of the day, you're going to have to pay the piper eventually. It's not sort of like, the rates are going to, they are emergency level rates because the whole world was shutting down. You know what I mean? So, yeah, it's just, you see sort of people going, okay, maybe we're going to get a sort of interest rate cut. Well, I'm open to anything, of course, and we trade what's presented to us, but realistically, I can't see a reason why they're going to do it at the moment. Inflation's still an issue. It's only going to get worse if you cut the rates. You've got super strong, like above expectation employment. So that sort of paints a picture that, the government, well, I sort of think that it was a government employment because I know small businesses are obviously doing it pretty tough. But the thing is, it's sort of like, just lowering the rates just because of some people are hurting a little bit. Well, it's sort of like, it's only just kicking the can down the road, and things are going to get a lot worse if you just sort of give in to the short-term pain. So they need to fix the inflation problem first. And as they said, they're looking for higher unemployment. That obviously is moving in the wrong direction. I just don't see it lining up as to why they're going to cut the rates. That's just my take. Anyway, point being, and how we can use that is the idea that it means that for the time being, Aussie's not down here, 65, 64 cents, because I've been short side Aussie from the top over here. I've started to layer some longs around this area. I caught quite a few nice little fills down underneath 67 here for the idea that we could potentially just more or less start to play this range moving forward. I don't think while US dollars powering on, we've got any reason to sort of get back up over here. Technically, we've broken the levels that we should have held. So I think, you got to pay the price for that. It means that basically you're not going to see a V-shaped recovery up over here. At best, you're going to see some ranging around this area over here, but it doesn't matter. We can still trade the ranges. It just sort of means that sort of like, we're not going to be getting sort of big, massive breakouts or anything like this. And it takes the idea that you may have more yearly highs up over here, up around 70 cents. And that's becoming a pretty tall order, sort of looking forward into the end of the year. So anyway, we've got this little bit of a wedge. We've got a breakout. It's not a super strong breakout. You've tried to go through for a second time. Hasn't been able to do it. It's been capped at 67.10. Again, you just want to see, can this candle do, or can any of these candles through this move do what these candles could not do? Can it sort of get back and make this a support level again? If it does, you're going to trap a large segment of the market down here underneath 67 and gives you a potential for a little bit of a squeeze. If we see DXY, US dollar broadly across the market sell off a little bit, that'll also sort of feed into the idea that we could be moving back up over here. But as I said, I think that we are really going to have a tough time once we get into 67.50s. So around this area here, there's a lot of chop through here, so it's going to be a lot of chop sort of coming on the other side of it as well. But if we could get above this level, well, that gives us something else to think about. But I think that's going to be a medium-term capped area. But I do think that there's potential for this to shoot up here a little bit more. I mean, the downside of it, well, not the downside, but the reverse side of this is that we just play the lower range, which is realistically down here. And we say, okay, this is resistance. We come back down here, see if we hold for this for support, and see if it does sustain it and hold off from going down here. But the reason that I sort of harped on so long about the sort of the interest rates and everything with Aussie just then is because that's the thing that keeps Aussie elevated from being down at these levels. If we didn't have that, with DXY running as hard as it is, and US dollar getting bought up as hard as it is, Aussie would be smashed. It would be down over here. So as long as we've got that kind of sort of, we're not about to cut rates in our corner, that'll keep us from getting elevated. When that changes, when they start to sort of get the bits of data that support that, that's when you sort of think, you look at sort of what US dollar's been doing across the market, and that's when you go, okay, you better watch out because Aussie could have the potential to drop pretty hard once you take out those supports, and the supports being the idea that we're still not even sort of really considering cuts at this stage. All right, so yeah, above 67.10, below 66.90. I would say that, look, you're coming back down to the 70s and you're just going to end up playing this lower part of the range. But I'm going to put this back over, put this down here. Small recovery. Put this at 60. Where's it? 67.10. 67.11. Cool. All right, so that is Aussie. Move along. We've got copper. Copper came down, finally hit our buy zone. So I actually caught copper through this little area here. I had a mate sort of said, he's trading a thing. He's like, oh, look, it's coming down in 200 MA. I obviously don't use the moving averages so much, but it's coming down to what could potentially be the bottom of this little support through here. So I took a little entry here, caught it back to even. Anyway, I caught this move here, which was quite good, but it got absolutely smashed. And this is what I was saying yesterday, that this was the level that we were potentially going to see some areas, and bang, on the money. That is exactly where it sold down, and it sold down hard. Look at how far this came down. Like, it was moving forward. And this is why you take bank along the way. You got to get paid for your work. And, it comes up here, and then boom, down here. This was like 1,000-point drop. 43, yeah, it's like over 1,000-point drop to the bottom side here. So yeah, look, it's still in its little downtrend here. You could still say it's just firming up this little wedge a little bit more. I think another test, if it can hold this area here and then maybe go over these bounce highs, this would be an area you could call a short-term confirmation, because we can see that this was a little bit support, resistance here. So I think if you can sort of, another shot in the buy zone and then sort of come above this immediate falling resistance and above this horizontal, I think this could be the thing that sort of gives us a little bit more of recovery up to the top side over here. So I think this, that is where I'd be sort of thinking, and again, bang, to that level over there. And flip across, and we got China. China's still grinding higher. Look, it does look like it's about to sort of come down, but then, of course, it still flies through. The big thing with China was that we got the stimulus, and then there was the talk of more stimulus, and it feels ages ago, but this has just started this week. And it's just really gone, oh, what? We're not getting it? Okay, bang. And they've just ripped it up over here. We are coming into a bit of an area. We've got marked out. You can see sellers are here, sellers are here. This was the top side previously. It's rejected. It's rejected. I think this is still the line you need to get underneath. 711. Under 711, you might see some deeper pullbacks and that. As I said, these are the kind of areas that I'd be interested in. But yeah, for the time being, this could potentially just keep grinding higher. I mean, that's what one does. If you look at the previous times it's dropped, I mean, these hard drops here, and see, it just grinds, pulls back, pulls out, and grinds. It's never sort of general. I mean, you get these mass sell-offs, but as it moves up, it just grinds. It's not really something you really trade so much. It's more just you keep an eye on and use as a barometer for sort of Asia risk, and obviously in turn what's going to be happening with Aussie. All right, so that's pretty much it. Bit of a longer one, particularly for a Friday. But if we go through again, look, it's been really quiet on the news. We got a bit of China data out at 1 o'clock, so I think that could be something worth looking at. 11:32 now, so in an hour and a half. I mean, 12 o'clock, we're going to get some volume in. See, gold is pushing to 26.95 right now. If that takes out 27, I think that'll give us a little bit of a push. But I'm looking for that 12 o'clock metals hour, as we sort of know it happens. All right, that's it from me.